So support and resistance levels are one of the first things that traders actually learn. But honestly, most people use it completely wrong. They draw 15 million random lines on the chart and they wonder why the price keeps ignoring them. So the truth is that support and resistance levels actually work, but only if you keep them simple and understand what you're actually looking for. So in this video today, we're going to break down everything you need to know and how I personally use support and resistance levels in a clean, practical way without overcomplicating it. So let's get rid of all these lines and let me show you exactly what we're talking about. Now let me explain what support and resistance levels actually are. So support is an area where the buyers previously stepped in, and the resistance is an area where the sellers previously stepped in. That is pretty much it. So these levels matter because traders remember them. If price rejected a level aggressively before, people pay attention when price comes back there again. And this is very important. Support and resistance levels are not exact lines. They are just zones. So a lot of beginners expect price to reverse an exact pixel of a line, but the market doesn't work like that at all. Now, the biggest mistake people make in drawing these lines everywhere. If every level matters, none of them actually matter. So you only want to focus on levels where price reacted strongly. So a strong rejection, a strong breakout, and a strong reversal. Those are levels institutions and traders actually care about. So another mistake is actually forcing levels onto the chart when they might not even be there. So right now I just drew just these two levels here, and you can pretty much see the exact thing that we just talked about. So you can see that price comes up to this resistance level, we hit it perfectly, and then we get rejected from that level again. We consolidate for a while, and then we have a strong push towards the downside. And now, as we get to the support level, we get through that support level many times. You can see about 4 times we fully get through it, you can see. And we have been rejected from that level. As you can see, we've had a strong push back up to the upside. So, like I said, it's not a single pixel move where price is expected to move directly to this support level. So literally, as soon as it hits the line, you expect to move back up to the upside. That's not how it works at all. So you can see price moved heavily into the support level. Then we made a reversal back up to the upside, and you can see we've had confirmations on that resistance level here. So you can see that those candles ended right at that level. Now we made a reversal, but you can see that move for the downside wasn't strong enough, and we continued back up to the resistance. Slight breakout and the rejection again, and then you can see we tried to get through that resistance level again here, 3 rejected areas, and then a strong reversal to the downside, retest of that support level, back up to the upside, downside, not enough for the upside, and then we break out towards the downside like we've just seen here. So if it doesn't look like there is a level there, then there probably isn't. So don't try to make your charts fit your analysis. So let the chart show you what actually matters. Now looking in an hourly time frame, we have got obviously the larger time frames you have, the stronger your trends are going to be. So here we have many rejections of 78k. So we traded in this level for quite some time actually before we had that big move for the upside where we hit about 82k plus. Now we did try to get back up through that level of 78k, 77k, but you can see many rejections, came to a low of 74, consolidated, and then heavily moved to the downside, which is where we are currently trading, just below that major support level that we have in the daily time frame. So looking in the daily time frame, you can see that the Bitcoin has been moving for quite a long time in this pattern. So you can see that we have touches upon the support level. You can see resistance level as well, here as well, here as well. So you can see that there is confirmation, and the bigger time frames you have, the stronger your trends are actually going to be. Now, how to actually draw these levels? Here is a very simple process that I actually use. So first, we zoom out slightly and look for obvious reactions. So if I were to zoom out, I can see that the price obviously is consolidated and actually stuck within like a little tunnel of price. So pretty much you can see that the price stuck within kind of this area, and well, I expect for this obviously a big drop to the downside, but you can still see that it came back within that level and stayed within it until we had that break for the downside. But what we look for is the major and obvious reactions. So you can see that price has been consolidating, and you can see that price has obviously hit that top side, and it's been moving from up, down, up, down, up, down. So from the top and bottom, it's just been moving in this area. So then I would obviously mark the zone. What you would do to mark the zone, you would look for a candle wick. So pretty much I would base it off, let's say this candle wick here. And then I would look across the line and see what candle wicks touch this level to confirm that the level is actually there. So the more touches you get upon the level, the stronger the level actually is. So we are now looking in the hourly time frame. So if you're trying to find a level, you can actually look in a wider time frame to find it, then you've obviously got it, and then you can expect price to go to that level, obviously according to what you've analyzed in your market structure. So looking upon this line here, we can see that we don't really have too many candles touching that level. So practically we have none. So then we obviously will go to another candle, let's say down the line, that's a little bit higher or lower, depending on kind of where you're at. So you can see still no touches. We go a little higher, still no touches. We go down here, and then we have a nice confirmation. So you can see that we have been rejected from this level here, rejected again. So we went upon this line here. So you can see we have another candle confirming that level here. So this is the candle wick that we went off of, and this one confirms it. Then we have a false breakout of this red one, which is obviously a bearish candle. And then we go further down the line and we see another false breakout, which is this little bearish wick. And then, let me just get rid of that. We see another confirmation perfectly touching upon this level. So you can see we've had a perfect touch, and then we move down to that downside, which is called a reversal. It's when the price gets rejected from that level and sellers push it back down. And now, the support level is quite the same. So we went based off of this candle wick at the bottom. So this is the support, this is the resistance. So we went based off of this candle wick at the end. So pretty much we do the same thing. We go across the line and we look for candles that touch that level. Now this line is a little bit thick, so I've just decreased it a little bit, but you can see that we've nearly got these perfect touches. This area here, this area here, but then we get closer to that level here, and then as we go down the line, we've got a nice touch here, perfect touch there, and then at the end we have a perfect touch, but from the other side. So price, you can see it broke through, but this right here is what we call mirroring. It's when the price comes below the level. Let's say price went above the resistance level. So let's say price went above the resistance level. As we saw, let's say here, it consolidates and moves and perfectly touches that level and then continues to the upside. So the fact that it's touched the level perfectly is called mirroring. It's a way of the market showing that the level is still valid. And that's exactly what we got here. That price touched that level perfectly, and it shows that that support level is still intact. Well, up until obviously price moved heavily outside of that range and continued heavily to that downside. So I mainly focus on where the price respected that level. So pretty much it's them perfect touches. The more perfect touches you have, the stronger the level is. Obviously looking in the wider time frame, you're going to be a lot more comfortable because that time frame is stronger. So let's say you're going in a daily time frame, that's obviously going to be the strongest out of them all. And then going into a deeper time frame, let's say 10 minutes, 15 minutes, or even deeper, let's say 5 to 1 minutes. And then you're looking of a little bit weaker trend. As going into smaller time frames, it's like a zoomed in version of the price. Now looking in these hourly time frames, you've got a nice strong view of where price is headed. So I'm not just blindly buying and guessing these levels. We analyze and we obviously watch how the price reacts at those levels. So you can see how the reactions have happened from each of those levels. But you can see we've had many confirmations from both sides, so it does look like we have a nice support and resistance level right there. So not all levels are equal. Strong levels actually show some characteristics, like first an aggressive rejection. So you can see at the end here, we've got a strong rejection from that candlestick. You can see a big rejection to the downside. Now, if price instantly gets pushed away from that level, that tells you that there is a strong selling or buying pressure. And in this instance, we had a strong selling pressure, as you can see from the candle wick towards the downside. Now, secondly is the multiple reactions. If price keeps respecting the same level over time, traders naturally pay more attention to it. So like I said before, the more touches there is on the level, the stronger the level actually is. So the most important part that traders actually miss is that support and resistance should be used as areas of interest, not automatic trade entries. Just because price reaches support doesn't mean you instantly buy. You still need some confirmation. You need to watch the candlesticks, you need to watch the reaction, and you need to watch the momentum. So sometimes we do have breaks of the support level, and we do sometimes have breaks of the resistance levels, just like we had in this big area here. So this is a very large breakout, but you can see price came back within that key level and continued to move within it. Now, looking at yesterday's session, we did actually see a very nice downtrend forming. You can see price is making lower highs, lower lows. Obviously, we looked in the 1 minute time frame, so you can see price was making lower lows, lower highs, but you can see here, we then have a weakness within this move towards the downside and continuing this downtrend. You can see we didn't make it to that support level. We obviously came to the upside, broke out slowly, but then obviously this wasn't an indication to buy yet, and we came back down towards that level. Then we broke through the level, and well, everything kind of went crazy from there. So if you want to see me trade live, then make sure you tune into that next live session. Now, if you want support and resistance levels to actually work, keep it very simple. Focus on clean, obvious levels, treat them as zones, and pay attention to how price reacts around them. Most trading concepts become more effective when you stop overcomplicating them. And support and resistance is probably the best example of that. Now, if this video helped you, then make sure you subscribe, because I'm going to be breaking down more trading concepts in a practical way without any unnecessary fluff. Now, just before you go, I recommend you guys check out Evedex. Now, Evedex is the platform I've been using for many months now. It's fully decentralized. There's chances to win iPhones, AirPods, and watches. Prize pools as well. You can trade stocks, crypto, and Forex coming in the near future. So the link for that will be in the description below, so make sure you check that out. Now, as always, thank you guys for watching, and I'll see you all in the next one.